Hey there, okay, it's video number 27 and this is going to be video number 11 of a module 2. Alright, let's go over to our trading station, and what we're going to talk about here is the envelopes. Alright, I've already got the envelopes applied to the chart. Oh wow, that's just popped up another 20-30 odd pips. So we're now 200 pips up now on that trade, so that's awesome stuff. Alright, okay, what I have on the chart here is basically two sets of the envelopes indicator. So we go over to the navigator section and then we locate the envelopes. Alright, just simply left click and drag and drop, and your first one is going to look similar to this. So what I would like you to do is to type in period 14 if 14 period is not already in there. Leave it to simple, leave this to apply to close, and set the deviation to 0.10%. Go over to your colors and this time choose red. Alright, the upper and lower band. Alright, they both need to be red, okay, and red is located right there. Alright, don't worry about the thickness of the lines, those are perfectly fine. Click OK. Alright, so now you should have this red line and this red line on the chart. Alright, the next thing you want to do is go ahead and go on to the envelopes indicator again, left click, drag and drop, and you'll get this property box that comes up. Leave it to period 14, simple, close, but this time I want you to change the deviation to 0.20%. Then go over to your colors, and this time I want you to change them to blue, which is right there. Alright, and then go ahead and click on OK, and this is what you get. Alright, now the object of this particular currency pair to find buy and sell signals are as follows. Now the currency prices need to fall below the blue line. Now the blue line represents your deviation of 0.2%. Okay, you want this to close actually fall below the the blue line, the 0.2% deviation, but you want the currency price to close inside of the first envelope and the second envelope. Alright, inside its deviation. So here, this one here is 0.1 deviation, and this is 0.2 deviation, and we want it to close inside those two lines, inside those two deviations. And you can see indeed, if I zoom in and go back to the beginning, you can see indeed that this is where this currency, this bar right here actually closes inside the inside the 0.1 and the 0.2 deviation. So that's good. So then we go along on the next bar. Okay. Now, when to close out? Well, it's pretty hard to say when to close out, but you can target either the previous body length of whatever this length is, and then you can target that as a TP. So you can take it from the top here to the bottom, and that says 13 pips. So you could target 13 pips if you want to. Or you can target the next previous high, or you can target the next deviation upper band as your take profit target. So you would have got in here, and your take profit would have been about there for 30 pips or 33 pips, and there it is, it got hit. Alright, the same is true likewise for the short trades, and that's when you see the market prices pop out above the upper bands. These two here that we just talked about, the 0.2 and the 0.1 deviation bands, these are the lower deviation bands. Okay, and then for short trades we look at the higher deviation bands. This is also 0.2 and that's also 0.1, but there are upper bands of the deviation. And then we want to see the currency prices break above, and then we want it to close inside the 0.2 and the 0.1 deviation area, and there it is, and we go short on the next bar. Alright, and we can target the next deviation 0.1 level, or we can target the 0.2. 0.1 will probably be your best bet to target. Alright, let's see if we can show you some more examples. Okay, so here we can see that the market is coming below the 0.2 low deviation. We're trying to look for a buy trade here. So we're looking at the lower part of the deviation. We can see it's breaking out here, and we can see a couple of areas. I mean, I prefer to look for the next bar to break above, but this one here, it did actually break the bar, but it didn't close above the bar. Alright, so what I tend to do is look for another one. Here's one, it breaks below the bar, but this one here doesn't actually break inside. It doesn't close inside the 0.1, 0.2 deviation. As we keep on coming lower, we can see that this is a break below, and then here's a buy trade opportunity there. Now I prefer to do these on green candles or on buy candles, bull candles, if anything. Alright, so you've got that momentum behind that trade already. Alright, and then go ahead and target the next part of the 0.1 deviation band. So here's where you would probably go in to go long. It did come down by about 17 pips, but later it did hit the 0.1 upper deviation band for 15.9 pips. Now you can do this all day long, and just pick up 10, 15 pips here and there, and just set a target of like 2 perfect trades a day. I'll tell you what, you'll be on your way. You'll be on your way to making many thousands of dollars. Alright, so that is the envelopes indicator. Alright, so I will leave you with that one for the moment. Practice this little setup here for 2 to 3 days, and then move on to the next one. Alright, so until then, I'll see you very soon. Bye for now.